Hello everyone, and thank you for watching this weekly technical outlook video here at xm.com. It's Monday, August 28th. I'm Christina Barthenidu, investment analyst, and at this video I'll share my view on dollar yen, euro dollar, and Aussie dollar. There will be a couple of key data releases out this week, including the US nonfarm payrolls report, the ISM manufacturing PMI, and the core PC inflation index in the US, while in the eurozone the focus will be on flash CPI inflation data. Also, China's PMI data could attract special attention, especially in Aussie markets. So starting first with dollar yen and the US nonfarm payrolls report, expectations are for a softer job creation of 170,000, which could consequently back the case for a pause in September. If the data surprise to the upside, that could increase the odds for a rate hike in September, but probably the Fed will wait for more evidence before it decides to raise interest rates again. So a pause could be the case this September. Nevertheless, stronger than expected data could help dollar yen to overcome the 9-month high of 146.55 and the 146.40 resistance and head towards the 1998 high of 147.70. Above that, I expect the next resistance to emerge around this resistance line, which rejected the pair twice since March 2023. That line is currently around 148.80, a break of which could then take us up to the 150 psychological mark. Now, from technical perspective, the risk is still skewed to the downside, given that the RSI is still holding a negative trajectory despite turning up during the previous sessions. The MACD is still around its red signal line, and the stochastic oscillator is heading towards its 80 overbought level. So a bearish correction is still likely, and in this case, if that happens, and if nonfarm payroll disappoint, then that could drive dollar yen down to its 20-day exponential moving average seen around 144.80. It's also worthy to note that the 23.6% Fibonacci retracement of this up leg over here is very close at 144.35. So if the price corrects below that level, the sell-off could stretch towards the 50-day exponential moving average and the 38.2% Fibonacci of 143. Then if that proves fragile, then the sell-off could probably stretch towards the 141.50 territory, where it bounced up back at the start of this month, and perhaps attempt to reach that support trend line near 140.80. So now turning to euro dollar and eurozone's flash CPI inflation figures. Well, expectations are for further weakness in inflation, but overall the core CPI inflation measure, as well as the headline one, are expected to stay about 5%. So so that could still keep the door open for another rate hike as soon as in September. Nevertheless, if the data come weaker than expected, we may see euro dollar correcting down to 1.0730, while below that the 1.068 and 1.0634 territory could be another important support region, as it was back at the start of June. If the sell-off further strengthens from here, then the next stop could be near the 1.0515 low from March. From a technical perspective, while the risk is still skewed to the downside, we can see that the RSI, the MACD, and the stochastic oscillator are still pointing to the downside. They're still holding a negative trend, but we can also see that the RSI and the stochastic oscillators are very close to their oversold levels, so a rebound cannot be excluded. Nevertheless, I will still be cautious until the price manages to overcome that resistance line and move beyond its 20 and 50-day exponential moving averages, which are currently slightly above the 1.09 level. If we overcome that resistance line and close above the 50-day exponential moving average, the next obstacle could emerge around the 1.0985 territory, where the 38.2% Fibonacci mark of this uplift from 1.0515 to 1.1274 is placed. Beyond that, well, the market could get busy a bit around this broken support trend line of 1.1030, and we may also face some congestion around the 1.1065 level, a break of which, and more importantly, an extension above the 1.11 territory could actually improve market sentiment, could boost buying confidence, confirming additional gains. And finally, turning to Aussie dollar and China's PMI figures. While the Aussie has been suffering from worsening economic outlook in China, so if the data surprise to the downside, if they bring bad news about China's business sector, that could bring more damage to Aussie dollar. We may see a downside correction below this important 2020 support trend line, which is currently at 0.64. In this case, the next support could develop around 0.6280, where the price bounced up back at the start of November 2022. Lower than that, the next support could develop somewhere between 0.62 and 0.6169. That was an important, this is where the price started this uptrend back in autumn 2022. If that fails to hold, if the sell-off strengthens from there, then we may see some consolidation around 0.6120 that had been a key constraining zone in the past before we tumble towards the 0.5985 territory last seen in 2020. Looking at the technical indicators here, well, we can see that the RSI has just turned up after, it found a bottom slightly below its 30 oversold mark. So there's potential for an upside correction, but the 20-day moving average could ruin any progress at 0.6480. If not, if the price manages to close above that line, I expect an advance towards the 0.6517, 0.6615 region, where the 50-day moving average is approaching. Then above that, we may see some consolidation could develop within the 0.67 and 0.6730 territory near the 200-day moving average before we reaches again this important resistance line coming from 0.7660. So that's all for this weekly technical outlook video. Thank you for watching, and wish you have a great trading week.